Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, it was a good week on Wall Street. We had a little bit of a hiccup on Thursday where there was a sell-off late in the day in the last 2 hours, but generally speaking it was upwards all the way this week, and all the indexes finished strongly on Friday night. But what was also significant on Friday was that the Nasdaq Composite Index broke through the 2,400 level. In fact, it finished at 2,412, and that is a significant level psychologically for the market. We've had a good rally now, a choppy rally, but it has been creeping upwards for the last 4 weeks, and now the fear is that it's going to reverse possibly and pull back again, but the 2,400 level has been breached, and psychologically that could be a signal for traders and even program trading to reverse the market once again. The two factors that have probably contributed to the improvement, certainly in the last couple of weeks, have been the retreat of oil prices. That's been very significant, but more recently, in the last 7 days, has been the strengthening of the dollar. This will of course attract people to US assets, US equities, and that could be a contributory factor to the good week we've just seen. But those factors could be evaporating again very soon. It's reached a very critical point, has the market, and if we take a look at our Nasdaq chart, you'll see why. This is the 1 year chart for the Nasdaq Composite Index, up to date now, showing the recent rally that we've had in the last 4 weeks. This is the rally going on here. Now we've got a very interesting situation at this present time, because there's a confluence of several indicators that could signal possibly the end of this rally and a reversal again. If I show you the most compelling sign is the long-term trend line that's been in place now for the last 9 months, and if I set that there, you'll see that the downtrend has been touched on 2 occasions during the last 9 months and then retreated from that point, and we're at that same point here at just over the 2,400 level. We have got exactly that situation again. A little bit of volume building as well, which is also an indication that we could be about to see a short-term pullback. 2 other reasons that make us think that this is the most likely scenario. The first one being that we've broken through, or we're certainly extending the top channel line. See these parallel or virtually parallel at the moment channel lines. They've been roughly the same width all the way through the year, and we're right at the top of that channel line, so we'd expect it to pull back a little bit from there. And the other reason, of course, is that the long-term average, the 200-day moving average, which is this line, is at exactly the same point as well. We've reached that 200-day moving average. We think it would take a lot of market strength to burst through that and cause a further upswing in the market, and we're not sure that the market's got the power or the reasons to make that breakthrough. So 3 reasons really why we feel that this rally has probably run its course for the moment anyway, and liable to back off from this trend line and this moving day average line. This is not to say that we wouldn't get some consolidation a little bit further back, and then another attempt at pushing through to what would probably be the next resistance level, or certainly the next level that we would watch, which would be where it reached about 3 months ago, which is at about 2,550. But for the time being, we think that it's more likely to have a short-term pullback from just over the 2,400 level. So we've reached another major crossroads for the markets, we feel, with the confluence of 3 major factors. We've reached the long-term average line, and if this is in fact a bear market we're in the middle of, then we should be due for a pullback and a resumption of the downtrend. Also, we've reached a point where the downtrend itself is being touched, and it would require quite an effort from the market to break through that convincingly to the upside. And a more minor point, but still of some significance, is the channel line that the market's moved within all year. is being touched on the top side as well. So for three factors, we think showing the market at a turning point, at least short term, and likely to pull back. We do have the two good factors, as we said before. The drop in oil prices has certainly helped, and the strengthening of the dollar. But against a basket of other compelling downtrends in the economy, a rising unemployment picture, the housing market still showing very little signs of making a firm recovery yet. There's lots of reasons. Add to that the rather poor latter half of the earnings season, where most earnings have been disappointing. Add to that the second half of the earnings season has been really disappointing. Most companies disappointing analysts. And with financials, well, we did have that good pullback rally, but we do feel that the financial stocks are still in considerable trouble going forward. In fact, there's not much out there that would encourage us to believe that in 6 to 9 months' time the economic situation would be a lot brighter. So is there any real reason for the market to keep going up? We doubt it, but we'll keep a very close eye. Until next week, it's goodbye from London.